Okay, so today the market is trying to stabilize with the SPY and the QQQ doing nothing impressive, right? As it's earnings season, we see some stocks behaving crazily. We're gonna talk about that later, but in general, the main indices are just okay, maintaining the trend without surprise. So in today's video, we will update our studies and see what to expect next. My name is Nathan, and here on this channel we study the market from the perspective of technical analysis, and all the strategies and scenarios described here have a technical basis. Welcome or welcome back to the Finance Hydra channel. Now, as we can see here, SPY is clearly maintaining the bullish bias. We are still in an uptrend. As long as we stay above our two major support levels, the uptrend will persist. These two support levels are, first, 21-day EMA, the exponential moving average on the daily chart, and the 574, the previous top level, now support level. As long as you stay above these two key points, the trend will persist, and in the absence of technical evidence suggesting a bearish reversal, the SPY is supposed to retest and break the previous all-time high area at 586. Alright, so far, there is not a single top signal, there is not a single bearish reversal chart structure. But Nathan, today we are dropping 0.14% right now. Yes, we are. However, a single correction, one single bearish candlestick is never enough to actually reverse the trend, alright? We need to see SPY losing these two key points first, and then we'll see how to proceed. But so far, the bullish bias is still intact. And the QQQ is also maintaining its bullish bias. However, this one has yet to break the all-time high resistance level, which is right now at $503.52. Yes, we are still below this key point, so the situation is still quite delicate on the QQQ, but the 21-day EMA is still pointing upwards. We are still trading above the moving average. We are still making higher highs, higher lows. There is no clear bearish reversal chart structure on the QQQ yet. Therefore, just like the SPY, it is still maintaining the uptrend. Nathan, what if we lose the 21-day EMA? Then alright, we may see a reversal ahead. And if we see a reversal on the indices, when we take a look at the weekly chart, the SPY could easily correct to the 565 again, and this is it. As far as I know, any bullish reaction on the weekly chart above the 565 could be just another buying opportunity, because although we could see a mid-term correction on the SPY, this is not gonna reject the long-term uptrend seen on the weekly chart. Similarly, the QQQ is also clearly bullish. We are still inside an ascending channel, right? Maintaining the bullish bias. We could retest 477, which is very close to the weekly moving average over here, and then we'll see. However, such scenario is not going to materialize unless our indices lose their main support levels that I just described to you over here. If we see a sharper correction, then in this scenario, Nvidia could correct a little bit more. Nvidia could lose its 21-day EMA over here, meaning we could see a sharper correction on the weekly chart, maybe to the 21-week EMA again. If we see Nvidia respecting the moving average, maintaining the bullish bias, then alright, we are gonna probably seek higher levels. We're gonna probably retest the all-time high area next in the next few days and break it, materializing another bullish pivot point, because Nvidia is bullish. We are making higher highs, higher lows. As far as I know, we are supposed to make a new higher high, unless if Nvidia loses its support levels and materializes a crystal clear bearish reversal chart structure. So far, it is maintaining the bullish bias. We are still in bullish territory. For now, let's watch out this moving average over here, the 21-day EMA, which is supposed to act as a dynamic support level for Nvidia. Meanwhile, we see Tesla. This one over here is quite interesting because Tesla failed in breaking the 265 resistance level, right? We not only failed in breaking this resistance area, which is a very important resistance level seen on the weekly chart over here. Since December last year, we failed in breaking this key point, but on the daily chart, we see a classic dark cloud cover candlestick pattern, which is a quite reliable bearish candlestick formation. And as I describe in our ebook about technical analysis, which is totally free, by the way, just take a look at our website, join the 5% project for free for 7 days so you can download this ebook for free, which is gonna be yours forever. All right, this candlestick pattern over here is a very bearish one. It is the counterpart of the piercing line, which is a bullish one, right? The dark cloud cover is a quite powerful bearish reversal candle structure, and here on this ebook I teach you guys how to trade this pattern and much more. So just download it, take a look at our website, link in the video's description. What's more, by materializing this dark cloud cover pattern, Tesla below the 265, Tesla suggests a sharper correction ahead. And as far as I know, any correction to the $242, which is very close to the 21-day EMA right now, could be totally normal, expected, or even desirable, especially for those who are waiting for a clear opportunity in Tesla over here, who are out of the party, who want to join the party and are just waiting for the risk-reward ratio to optimize. So if Tesla seeks our next support level over here, it is gonna be just fantastic, because right now, guys, some people ask me, Nathan, is Tesla a good buy right now? Speaking by myself, I hate buying near resistance levels, buy near support levels, because the risk-reward ratio is better, because your stop loss is going to be very small and the potential reward is going to be great. It's going to outweigh any potential loss, all right? You are gonna risk less than you are willing to make if the trade goes in your favor. So this is how we trade over here, right? We work with statistics, risk management, and of course, we use a lot of technical analysis over here in conjunction to all of these other tools that are at our disposal, all right? Oh, and by the way, remember, if you want to learn how to trade the market safely, seeking consistency and results, I have news for you. That could be the next step in your journey. I'm launching the Finance Hydra VIP Mentorship, an exclusive mentorship program for traders who want to go further. We're gonna work together on swing trading strategies, risk management. I'm gonna analyze your investments and much more with the support you need to develop. So just leave your email over here on our website, which link is in this video's description, all right? To be one of the first to receive the launch information. Remember that places are limited. Since you are going to have private meetings with me in person, there is no way I can attend to dozens of people, right? So secure your place now and be part of this exclusive experience. The link to our website is in the video's description. All right, now back to our analysis over here. As we can see, Tesla materialized a very ugly bearish reversal candlestick pattern over here below the 265, our major resistance level. But Nathan, Tesla is up today, right? We see bullish candlestick pattern. Yes, we do. However, this is not enough to reject this candle structure over here. In order to stand a chance of continuing the bullish bias, Tesla needs to break and close above the 265 again, all right? And to be honest, It would be just fantastic to see such movement right now because the 21-hour EMA seems to be acting as a support level for Tesla, short-term wise. Therefore, it feels like it is now or never for Tesla because if we see a meaningful bullish reaction closing above the 265, then alright, Tesla will have a chance of avoiding a sharper correction to the 242 again, to the 21-day EMA again, alright? But if we do see a sharper correction, let's not panic because that's totally understandable. See, Tesla went up last week. Last week, Tesla went up 22% roughly, right? So it is totally normal to see a small correction over here on the weekly chart. We could drop all the way down to this support area and still Tesla will maintain the uptrend. So for now, let's pay extra attention on these two key points. And I know guys, AMD and Google, right? These two stocks are very, very crazy right now. I'm gonna talk about them. First, AMD. This one collapsed after earnings, right? However, it seems to me we are just trying to seek the next support level, 148. Then we'll see if AMD will react or not. Nathan, what if it doesn't react? Then we may see a sharper correction on the weekly chart over here to the 130s again, all right? Maybe there is no other meaningful support level right now, so maybe we're gonna get there, unless if we see a very good miraculous reaction above the 148. Meanwhile, we see Google. Google is behaving with an astonishing precision right now. Google is obeying the technique with incredible precision. See, right now we are exploding after reporting earnings, right? However, it seems to me that we just closed this gap over here from the previous earnings, right? From the previous earnings report from July this year. So we just went up to close this open gap and now we are dropping. That's totally normal. This is the best place for us to see Google materializing a top signal. Now, by materializing and by triggering this top signal, we could see Google easily correcting all the way down to the 21-day EMA again, and then we'll see if Google will be a buy or not. Right now, Google is just making a bearish reaction, suggesting more correction ahead. Nathan, can I go short over here, right? Well, if you have a good strategy, yes, you can. However, bear in mind, you are going against the trend because the trend is bullish. Google is making higher highs, higher lows. It is above the 21-day EMA. So be aware of this, right? And you need to have, you must have a very good and clear trading strategy in order to short in this scenario. But who am I to disagree, right? Who am I to disagree if you should buy or short, right? Guys, as long as you have a strategy, I will never argue with you. There is no right and there is no wrong. The only thing there is wrong is to trade without a strategy. But if you know where your stop loss is gonna be, if you know where your target is going to be, that's totally fine. I'm not going to dictate what you should do with your life, with your investments, all right? Now, Palantir. This one is facing a very problematic resistance level, $45. It is going to report earnings in 5 days. This key point over here is indeed acting as a very strong resistance level for Palantir. By materializing a top signal over here on the weekly chart, Palantir could correct to much lower levels. And since we're going to report earnings in 5 days, the situation will just be more complex next week. So if you ask me, Nathan, what if Palantir collapses over here? If Palantir collapses, we're gonna see a crystal clear support level around the $40, right? If Palantir collapses, this is not gonna ruin the bullish bias, but if we do see Palantir breaking the $45, then the 45 will become our next technical support level. So it all depends on the direction of the next breakout. For now, Palantir is not necessarily an amazing buy, but I can't say that it is a sell right now because there is no way we can predict what's going to happen after earnings report, all right? We can't, but we can react properly to what we see next. And of course, I'm going to keep you guys updated in this channel every single day. Guys, every single day, unbiased analysis. We're gonna talk about stocks, SPY, QQQ, Nvidia, Tesla, etc. every single day. So if you are still watching this video and you're not a subscriber, just subscribe because you did like the content, you know it, I know it. Just subscribe to the Finance Hydra channel and join our amazing community. I highly appreciate your support, your trust, your friendship. Thank you very much. Stay safe, guys. See you tomorrow.